Strategy first, and you guys are doing some presentations on that. The middle section is a lot of techniques. How do you get cost data right? And that's what we're in right now. How do you get the data right so that you can do some work with it? And then at the end, we'll talk about how it's used. Why is it important to get that data right? How do we use that to ensure that our strategies are being followed? How do you do that to ensure that your employees are doing the right thing? And how do you compensate your employees for doing the right thing? So that's kind of the flow of the class in general. 2 weeks ago, we focused on different kinds of costing systems. Today, we're going to focus on budgeting. Chapter 6 is about master budgeting, which many of you have probably experienced in some way or another. And then Chapter 7 and 8 involves something called flexible budgeting, which you may or may not have experienced. And as we talk about flexible budgeting, we'll talk about the last costing system, which we didn't talk about 2 weeks ago, which was standard costing. So today, Chapter 6 is master budgeting. How many of you have been part of a budget cycle in a company that you've worked for along the way? Is it fun? It is fun. Wow. It wasn't fun for me. If you're in the cost center, well, I've been on both sides. If you're in a cost center, the budgeting process is they ask you what money do you think you need to get the job done. You tell them and they say, no, cut it in half. If you're on the revenue side, they say, how much revenue are you going to be able to produce? You give them a number, they say, oh, double it. And that's the budgeting cycle. It's a give and take to find the appropriate budget for usually for the next year. And it's a process, if it's done right, that's collaborative. It's not a top-down process, but rather a process where each, we'll call responsibility center, has the chance to express their belief on what their budget should be, and then it's a give and take process to figure out what an appropriate budget should be. So we'll talk about why there's budgeting. We'll talk about the process itself, how do you prepare it, and how do you work within the world of uncertainty. Obviously, a budget that's produced before the year even starts. If it's a calendar year budget starting January 1st, the process usually starts in October. So October 2013 has to figure out how much goods you're going to sell and how much resource you're going to need in December 2014. That's kind of unrealistic. So there's uncertainty in the future that has to be included in the process. And then a few other topics at the end to wrap it up.